Hello everyone, friends. Mozart here. A quick market overview after Trump's tariffs. When Trump announced tariffs of 10% for everyone, the market started to rise, and rise significantly. But then he started to clarify that 10% was actually the base rate. And specifically for China, it was an additional 34%, for the European Union 20%. For countries like Cambodia and Vietnam, it was almost 50%. For the United Kingdom, it was 10%. For Japan, over 20%, and so on. Interestingly, he did not include Russia in these tariffs. Nevertheless, the tariffs turned out to be very significant, and the market reacted with a decline. So, how does this situation look now? Let's analyze it, using the 4-hour and daily charts as examples. Let's go. The first thing I want to look at is probably the daily chart. Since on the daily chart we were unable to hold above the 200 moving average once again yesterday, and the candle closed quite bearishly with a volume almost twice the average volume, with red volume, and we closed right at the bottom of this candle. So, what does this mean for me? In general, this is a signal to short, and to short right from the current levels, with a stop somewhere above these levels, on one hand. On the other hand, I don't want to short from the current levels, for some objective reasons. Because, firstly, Bitcoin was surprisingly stronger yesterday than even the broader stock market, and it didn't fall as much relative to this entire consolidation. That is, overall, it is already starting to behave stronger than the broader market. That's on one hand. On the other hand, I still have the remnants of my positions in my medium-term long portfolio, and I plan to protect them only at higher prices. So right now, I don't see much sense in taking risks with a short position at the current levels. Well, personally, again, according to my risk management and the number of positions I currently have. If I didn't have any positions right now, yes, most likely, I would open a short, here with a stop, somewhere around here or here. So the stop would be a trigger, based on the condition of the daily close above the stop level. Yes, exactly, the kind of wide stops that I like. But the targets would be close, meaning it wouldn't even be one-to-one, the first and second targets. However, my opinion right now is the following. It looks like there's a slightly higher probability. Well, maybe not even slightly, but a higher probability that it will go lower. Unless Trump suddenly changes his mind and cancels these tariffs. And he might do that. A very unpredictable person. But for now, technically, it looks downward. For now, technically downward. Targets, where I'm ready to buy back. Bitcoin. Buy back. You can go ahead and set limit orders right away. I already have them set up there. I've mentioned it twice already in previous videos and on the Telegram channel. This is the first range where I'm ready to buy. That is approximately $77,000 to $78,000. Well, maybe 77, 79. The first set. And the second is right here with a possible spike up to $71,000. These are the two main targets where I'm ready to buy. The stop, as before, will be around 65 from the average entry. Also a trigger with a daily candle close. Based on the condition of a daily candle closing below this mark, I'm ready to buy here. To short, I repeat, given what I already have, I don't want it from the current levels. If I didn't have a certain portfolio, risk management, and division of my funds, I would short from the current levels. Because from the current levels, the situation still looks bearish. And it will look bearish exactly until Bitcoin swallows up all of yesterday's red candle. If Bitcoin, swallow up this red candle, and my stop is set, for example, here or here, I would close my position immediately. That is, without waiting for a reaction to the trigger stop. I would simply lock in half of the position. Or rather, I would lock in the loss at a half loss. Not a full one, without waiting. Because, most likely, it will reach even this point, because it will be an extremely strong signal covering yesterday's bearish candle. But for now, it looks bearish. And right now, shorts are predominantly prevailing, directly from the current levels, with the same targets where I am ready to buy back. And if you are considering shorts, in principle, you can consider them now. Taking into account how yesterday's daily candle closed. The 4-hour chart also looks bearish. There was a good attempt on good volume yesterday to consolidate above the 200 moving average on the 4-hour chart. But ultimately, with Trump's final tariffs, when he announced that, they turned out to be, well, very high, not as the market initially expected. It all fell through and Moreover, change the trend in this area to a downward one, and on even greater volume. This is also a short situation, both on the 4-hour chart and the daily chart. And I repeat, if I didn't have a position, I would short this. If I didn't have a portfolio, and already some amount of locked funds, before this, I drew green lines. These are the targets for the decline. I drew them approximately here. We closed 2 of these green lines, and now the 2 lower remaining ones are relevant. And I would short the whole thing, based on this set of 3 targets, this trio. If considering the 4-hour chart, I would place the trigger stop somewhere here, again behind this red candle. This would be a very strong signal to cancel the entire decline and return to, say, $95,000. So, in the end, we have both the local and the 4-hour chart, as well as the daily chart, indicating shorts. If you are not burdened by any positions, you can consider shorting right from the current levels. If on the 4-hour chart the stop losses are triggered here, on the closure of the 4-hour candle above these levels, then I would set them wider, somewhere beyond these highs, beyond these March highs, early March, and I would close the position. If the daily candle closed above yesterday's candle, this would be my main position right now. But, at the moment, considering my current leverage on the deposit, I am only considering long positions, buying back in these zones. In other words, from my point of view, this is the boundary of transitioning into a bear market. I have mentioned this repeatedly, and I am still considering the hedge at the same level as before, which is at 92,120. That's it. I don't want to make any decisions in the current range. This is short term. In principle, you can consider both the 4-hour and daily charts as short-term time frames, well, in the context of my trading. For example, if you look more long-term, medium-term, I still hold the opinion that sooner or later we will see a retest of 90 plus. This candle we will trade fully. This downward candle, maybe even this candle from the end of February. That is, in principle, we might see 97, 98. Well, starting from the marks of 91, 92. In this range, the price most likely will return. How will it return? From my point of view, either somewhere around the current prices. There might be a little more decline. Maybe we won't even update this low, and we'll go for a reversal. Suddenly, and most likely, Trump will start to ease tariffs. I don't think he's completely foolish and will fight the trade war to the bitter end. He's negotiating in this way. Either we update this low, retest the annual moving average, which is more likely now considering yesterday's daily close, and go somewhere with an update to 76. Again, possibly with a spike to 71. And still, we go over there. Just like that. This is my main scenario for the midterm. Right here, I make a decision regarding the midterm portfolio, whether to fix it or not. Around here, I also expect a retest of $1 trillion on total 3, that is, on all coins. This is the midterm layout, it doesn't change. What I mentioned at the beginning of this video is only of a short-term nature. And the short-term nature is currently bearish. Thank you all for your attention. This was Mozart. Have a great day and goodbye to everyone.